Suite's an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Gallon Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures, two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. 3. Mitigating organisational risks while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.
the morning and come on in nice and early, got your posies. I'm just going to share a little tidbit of information for those of you who have come. Would you mind, fellas, just pumping up the house lights a little bit at the back? Because I cannot see all our fantastic delegates. Thank you so much. So we were having a chat, and if you were in the room early yesterday, we're having a little brief chat about the sound quality in the room. So just in the front around the corners here, we have got a little bit of like a feedback or bouncing off the walls. So if you're finding it hard to hear, because I was thinking, is it just me and these hearing aids that I've got? And I said, look, you might want to jump on and watch online and just take it through your hearing aids. But there is a bit of issue with the sound down the front. So we've tried to rectify it. But if you're struggling, sort of second and third row back and more towards the middle is a lot better option. So who went home yesterday? Did some investing on the back of what you saw from our 32 companies. Anyone? No one's admitting anything. Interesting. Okay. Well, I've had a chat with a few of you. Shane, Nigel, Richard, you've given me your favourites for the day. And a couple of you, it's interesting, so not all of us have come from Western Australia. There's a couple that have come from the eastern states for this conference. It's nice to have you. I'm not going to point you out, anyone sitting down the front here in the second row, but it's nice to have your company. Nice that you're following what Stewie's doing around Australia. Now, we're going to launch ourselves pretty much into it this morning, and we are going to start with this fella here. Now, he's a bit new in his role, but in a recent interview, this fellow, Glenn Grayson, who is the newly minted MD for Aruma and our first speaker this morning, stated, and I quote, "What is making shareholder value is what I will be focusing on." So Aruma, if you're following them, has got 4 gold projects, and they're situated in pretty much Aussie gold hotspots. And we heard Nicholas Frappel, if you're in the room at the end yesterday, from ABC Gold Refinery. He gave his view on the mineral during that last presentation. They also have a very promising lithium prospect, which is at Mount Deans, which is causing quite a flurry of interest among investors. So does the value for this fella here lay in the gold, or does it lay in the lithium? More questions for you too. Where are you at with your drive to push Aruma to the next phase of evaluation and development? Should we get on board? Did I also mention that Glenn is a geologist? He's got a graduate diploma in finance, applied finance, project management. He's another one of those serious overachievers that we like to get up here on the stage today. And he's got 30 years skin in the game. So kicking off our first session of day 2, would you please make Glenn very welcome, everyone?
I'm not sure about an over-tuner, Sennitt, but thank you very much. Welcome to day 2. I'm certainly glad that some people are here for the first presentation so early. So Aruma, we're a diversified exploration company, but we're focused on driving some shareholder value. So hopefully I'll sell you the reason why you should certainly invest in Aruma, and we're going to go to that next level. Disclaimer and competent person statement there. Corporate snapshot. So currently trading at about 7.3 cents. We've got 157 million shares on issue. Gives us a market cap of about $11.5 million currently. End of December, we had $3.2 million in the bank. And that's thanks to a portion of getting $800,000 back in a R&D rebate in December. So I'll talk about that a little bit soon, but that brings it to $5.5 million over the 12 years of Aruma's existence that we've been able to get back in tax rebates. That's down to our gold in settlements model that former MD Pete Swan certainly sells well. So that's been great to come back. We spend our money sort of 1.4 times. Board and management, James Moses is the chairman. He's over in Sydney. Peter has moved to non-exec director with Brett Smith coming on board late last year as well. And Phil McLeod helps me out as company secretary. So my projects. So we've got 5 projects spread out in Western Australia, entirely within Western Australia. And as most of us know here, that's the easiest place to do work. I've got lithium project down in Norseman at Mount Deans. We've been promoting that pretty well. Results earlier in January certainly give our share price a kick to just short of 10 cents. That's Naju country, and that's the lepidolite that we're finding down there. pretty consistently mineralised pegmatites. 2 gold projects in the Yilgarn, Salmon Gums, which is down just north of Esperance in the wheat belt down there on private farmland. And some RC drilling last year found high-grade gold, so the 5 metres at 50 grams in an RC hole there. And Carter Well is a hidden greenstone out towards Mount Magnet. That's still under application. In the Pilbara, we've got 2 gold projects or gold plus projects. One at Melrose, which is around Poulson's, currently operated by Black Cat Syndicated. And the other one is at Saltwater, closest to Newman. And that was pegged with help from some local Indigenous people there who are finding gold nuggets in the creeks at Saltwater. Jitty country there. But what is happening at Saltwater is it's really starting to develop as a rare earth province with certainly base metals, gold, uranium as well. So it's a multi-commodity prospect, Saltwater. So we're set for discovery. As I said, the 5 projects all in Western Australia, nearly 1,500 square kilometres. And we're focusing on finding exploitable resources of lithium, rare earths, gold, and the focus isn't just on gold anymore with our projects. So we were successful in 2022. We found a lithium resource. We've definitely found high-grade rubidium with the lithium, high-grade gold at Salmon Gums. We've also discovered at Salmon Gums that we've got a greenstone belt that's probably 5 to 6 times wider than we thought. So that's certainly extended our target area. And we're kicking off 2023 with a new team. So a couple of new board members. Pete's changed to director, and I've come on board as managing director to give Aruma a bit of a new sort of focus. So what sets us apart is our gold and sediments model. So what we have done is research the ground to fit our model of gold and sediments, but specifically looking for terrain that's really been overlooked for whatever reason in the past, whether it's poorly mapped or incorrectly mapped or just overlooked. So Salmon Gums was always mapped as part of the Albany-Fraser zone, not part of the Yilgarn. We know now it is part of the Norseman Belt. Carter Well was always mapped as granite by GSWA. It's not granite, there's mafic outcrop there. Saltwater, it's almost virgin country, it's untouched. But when some old friends there are showing you gold nuggets that they're digging out of the ground, you know that it's well mineralised. And Mount Deans, so outcropping tantalum rich pegmatites that were never sampled for lithium. Just a little, the most basic breakdown of the gold and sediments model is that it's not just gold, that's any element, but the sediments part of the model is that in active basins, sedimentary piles are thick, 10, 20, tens of kilometres thick, 30 kilometres thick. Up to half that space is empty space, porosity filled with usually seawater. Deposition compresses that, the seawater gets pushed out, the seawater scavenges elements out of the rest of the pile. Some kind of plumbing takes that fertile fluid, contacts something, traps it, contacts something that's reactive, and that's where you get your deposits. So that's the very most basic explanation of our gold and sediments model or sediments model. Come and see us in booth 68 if you want a bit more of a breakdown on the chemistry behind that. That's the nuts and bolts of it. So as I said, in 2022, we had a really successful year with the lithium, up to 1.5% lithium oxide and 2% rubidium oxide in the pegmatites at Mount Deans. And we're just starting the metallurgic test work on that to hopefully be able to make a good concentrate. Salmon Gums drilled the high-grade gold in RC, 5 metres at 50 grams, and really showed that we are dealing with Norseman-style mineralisation there, quartz veins in sulphide, mainly arsenopyrite. We also drilled the diamond core at Salmon Gums, and what we thought was granite in RC wasn't granite, it was a coarse felsic sediment which meant now we're dealing with a greenstone width of upwards of 3 to maybe 6 kilometres wide. So our targeting now has to take a step back and look a bit broader. And saltwater is really starting to develop into a rare earth province. There's some high-grade historic samples there. More recently, our neighbours around have certainly discovered a greater potential, and we're following that up as well. Just stepping into Mount Deans, 10 kilometres south of Norseman. So it's 200 kilometres to deep sea port of Esperance, right beside the highway and the train line. It is pegmatites in a basalt. It's that part of the geology is pretty simple. And the drilling hits we had last year, 8 metres of 1.1% lithium oxide and 0.8% rubidium oxide, 5 metres of 1% lithium oxide and 0.5% rubidium oxide. And then in an old hole that was drilled by Lithium Australia 15 years ago, wasn't assayed for lithium. So 5 metres at 1.2 lithium oxide and 0.8% rubidium oxide. And with these, we're also getting a fair bit of other stuff. So we're getting up to 0.6% cesium. We're getting elevated niobium and certainly elevated tantalum tin and averaging about 4% potassium oxide as well in micas. So just to show you, this graph is sort of explaining, we've got a couple of different micas. So some of those peaks where we're getting high lithium but low rubidium is more of the lepidolite, and the high rubidium and low lithium is what we think is a rubidium-rich muscovite, and the cesium is occurring in a feldspar. So our aim at Mount Deans is to define something mineable and capable of producing a saleable concentrate. And a lot of people don't consider lepidolite to be of value in Western Australia, but there's certainly a lot of interest in what we're finding here. And the spodumene concentrates or spodumene discoveries are certainly getting offtake agreements really, really quickly by overseas interests. And whoever's coming a bit later on really needs to lock in some lithium. They're coming for the lepidolite. So there is a lot of interest still in a lepidolite con. So Salmon Gums Gold, this is closer to Esperance. It's about 100 kilometres north of Esperance in the wheat belt. Farmers are fantastic there, really friendly and easy to deal with. But as I said earlier, this was always mapped as part of the Albany-Fraser zone. And as you can see, the Jurda Cut-Up Fault, which a lot of places have it called the Kundalini Fault, it gets sort of interchanged a bit, but the Jurda Cut-Up Fault there was always the southernmost mapped extent of the Yilgarn. A couple of years ago, Aruma Resources and Pantoro developed the Scotia project a bit further with a Green Lantern discovery. They've currently got over 1 million ounces in resource that they're mining and processing through Pantoro's Norseman mill there. That's south of the Jurda Cut-Up Fault. That's in the Norseman terrain. And you can follow the mag further south straight onto the Salmon Gums property there, where we're finding our high-grade gold. So Green Lantern, 28 metres at 8, 9 metres at 3, 9 metres at 5, is Norseman style, narrow. It's narrow, but it's high grade. So in closer to Salmon Gums project itself, 1997, Pan Australia, the only other company that's done any exploration down there, and they defined a soil anomaly with arsenic, and then drilled some air core and had the 7 metres at 2.7, 3 metres at 1.5 and 1 metre at 5 nearly. And then no further work until Aruma pegged it in the middle of COVID when it was vacant, and went in and drilled it last year and focused on that drilling from Panos. And that's where the 4 at 4.26 and 5 at 50 was discovered in that thistle area there. But the Iris prospect as well has a lot of hits over a gram as well. A lot of the RC drilling had granite logged in it. We wanted to understand, was the greenstone getting eaten up and stoped out by the granites? So we drilled some diamond holes. And what the diamond showed us is that there's pristine pillow basalts there, so certainly aren't hooked up and altered and messed up. but the granites were actually coarse felsics, grits maybe. So that showed us that we're not dealing with a 700 or 800 metre wide greenstone. We've got a 3+. So we did some geophysical work, some magnetics more recently. So this is literally completed last week, these images. So there's been no interpretation done. But if you can read a mag image, you'll know that the magnetics there are showing you that the granite's certainly a lot wider than first thought. We also did a ground gravity survey in closer to our main prospects to really understand the underlying geology. And that's certainly helping us with more structure. And Iris looks like it's maybe a bit more strata bound, but Thistle is certainly looks to be structurally controlled from that. And you can see the cross section there showing the geology now, that what we understand from the diamond drilling. Getting up to the Pilbara, so Melrose and Saltwater, both along the Nanjalgardi Fault, which is the main basement structure controlling a lot of the mineralisation up there. So Mount Olympus, over 1 million ounces now that Kalamazoo are developing. Capricorn Karlawinda project is further to the east of Saltwater there. And I'll jump into Saltwater because I'm running out of time. So Nanjalgardi splays going through the area there. We said we're looking through online information. We found work done by U308 in 2010 that had 11 and 9% rare earths values, Canyon Creek 0.3% lead, and Nobby's 3% copper. And they all sit close to this unconformity, which is the Bresnahan group above the Waialoo group. And so our model is that we're chasing an unconformity model, but more to do with our gold and sediments model, where the exhumed seawater with all the elements are getting plumbed up and trapped at the unconformity, and then reacting with what we know is iron and manganiferous shale, and that we can track over 80 kilometres on our tenure of that unconformity. So Dreadnought have pegged ground all around us and have released their information last week, and we're following up, and we're going to work with those guys to advance the project. Thank you very much.
Well, first came off the rank, you did well. And you know what? I didn't describe the rules of engagement this morning too, so you could have pleaded ignorance with me and you possibly would have got away with it. So would you put your hands together again for Greg, everyone? Is Pete Schwan in here? Is Pete coming to watch? Where are you, Pete? Where's Pete? This fellow down here, if you haven't met Pete before, Pete, of course, was the driving force for Aruma for 15 odd years, was it? But he's now bought a very sizable caravan. I've just seen it, and this is his mentor project. So he's led Greg in, and he's happily semi-retired, still slightly involved in the business, can't give it up, but you should see his caravan. Go and have a chat with him and see perhaps his little background in Aruma has paid off nice dividends for him. So it could mean something for you as well. Rules of engagement before, as my next gentleman gets up here today. 15 minutes we have for our speakers. I'll ring my bell at 13 minutes. I'll stand up at 14 minutes. And then I'll be standing right next to you. And remember, I won't speak at the end. I'm relying on you to clap your hands, and then I'll say thank you, because otherwise the ASX does not want my voice. They just want your insight. So this is Rob Sennitt, everyone. Can you make him welcome, please? So a quick intro. Rob he's got more than 30 years experience in the resources industry, including more than 25 years in investment banking. And he's advised resources companies on strategy, capital raising, and M&A transactions. He's here today, in the capacity as Managing Director of Alicanto Minerals. Now, he joined them. It's not that long since you joined them. That was last year, wasn't it? September.
5 months or so, yeah.
Yeah, enjoying the ride?
We're loving it.
Okay, he's smiling. So you must have something good to share with us today.
Absolutely.
All right, let's let this man take it away. We're travelling to Sweden, is that correct?
Absolutely.
Let's do it. Okay, thank you, everyone.
Yeah, thanks, everybody. Thanks, Chrissy. Thanks to RIU for having the conference, and judging by how many people were here yesterday, it's already been a great success. So Alicanto is focused on 2 projects in Sweden. Sweden's a pretty interesting place, actually. It's clearly a tier 1 jurisdiction based on the Fraser Institute. It's got a really long and rich history in mining, and it's one of the biggest mining economies in Europe. You know, you hear a lot about you know, how green Scandinavia is, and you know, I had all these nightmares about Greta Thunberg meeting me at the airport and telling me to go away. But ultimately, you know, their approach to mining and how it fits into the economy is pretty refreshing, actually. You know, we've got a great team on board. The team in Australia here, you know, with such luminaries as Ray Shorrocks and Steve Parsons and Mike Naylor, you know, great success in taking old projects and revitalising them into and bringing them back to life and creating some pretty significant shareholder value along the way. Team in Sweden is also impressive. It's led by Eric Lundström, who's the ex-chief geologist at Boliden. And who's credited with a number of discoveries up there in Sweden, including the extension of Garpenberg, which is a major mine for Boliden these days. But it's ultimately all about the projects. And you know, again, when I just joined the company and was doing my due diligence, it was just amazing to me that this company's been able to put its hand on two such high quality assets. I mean, these mines have been operating for hundreds of years, and in Falun's case, over 1,000 years. You know, Falun was the largest copper producer in the Western world for hundreds of years. In fact, the copper from Falun sits on the roof of the Palace of Versailles. I mean, it's mind-blowing, these two mines. You know, Sala itself, one of the largest, highest grade silver mine, produced over 200 million ounces at over 1,200 grams per tonne and up to 7,000 grams per tonne. I mean, mind-blowing numbers when you start thinking about those mines in terms of today's mines. But in terms of the company and the capital structure, you know, it's I've sort of given you a brief overview, and the fact that this company is sort of capped at sort of $20 million is pretty amazing. Pretty clear what my job is over the next period of time is really educating people in terms of what we've got. But it's a very strong group of shareholders that we have supporting us, and hopefully it continues to get bigger and brighter from this point in time. I touched on Sweden, you know, in terms of the type of, in terms of where it is and why I really enjoy operating there. I'm literally just back from Sweden. It's interesting. So we're located down here in the south, away from the much more sensitive area of the north, where you see a lot of the iron ore mines. You know, that's where we have the Sami people. That's where they do their reindeer herding. Much more culturally sensitive in that part of Sweden. Down where we are here, it's been mining, you know, for, as I said, for, you know, hundreds and even thousands of years. We have Lundin's big Zinkgruvan mine. We have Garpenberg, which is the big Boliden mine. So the infrastructure around this part of Sweden is fantastic. Ports, roads, rail, airports. But also the mining communities really understand mining. So, you know, again, the push in Sweden not to open up new areas, but to sort of stick at areas where they've been mining for all of this time is a real focus. And for us, it's absolutely the right place to be. Sweden, again, it's quite interesting. I mentioned before they're quite pragmatic about their approach to mining. You know, and again, the situation in Russia, you know, again, we read about it down here, but, you know, these guys actually see themselves as being on the front line. They're 1,000 kilometres away from what's going on there. You know, effectively, you know, by putting their hands up to join NATO now, they've ended 200 years of neutrality. It's a big step. This island here of Gotland is being remilitarized. They see if things go poorly for the Ukraine, that's potentially the next step for Russia. Again, it's mind blowing to me that could possibly be the case, but they are remilitarizing that island as we speak. So again, there's this real feel, you know, and while a wars are never a good thing, you know, it's really about becoming self-sufficient in minerals. It's a push from Sweden. It's a push from the EU. You know, you know, it really, for us, it's a bit of a question of right time and right place. It's a great shame to say that, but there is this real focus on critical minerals and building all those things. And, you know, Russia obviously being such a big supplier of commodities in that part of the world, you know, it needs to find replacements. So Sala is our first project. You can see the old Sala mine just here and our resource that surrounds it. That's 10 million tonnes of resource. You know, as I say, it's you know, Sala having operated for all of those years and produced 200 million of ounces. We've now got 10 million tonnes in a deposit there, which contain 300,000 tonnes of zinc and 15 million ounces of silver. It's pretty interesting. You know, our view is now as we look, or our strategy is now up there at Sala, is to continue to expand that resource, and we're pretty comfortable that this resource goes underneath the old Sala pit and out towards the old Bronos mine over here. We're currently drilling down here where we expect the Prince lode to continue, and we've also got some pretty good some pretty good signs that the deposit also continues to the north. So we're pretty comfortable that we're going to be able to continue to expand that deposit. But the really sexy part of Sala for me really comes down to the silver. At the end of the day, you know, while we have a zinc-based deposit, you know, that's to be expected in terms of the mineralization that we are. You know, this is a limestone reef. The upper strata is a high-grade silver and lead, and the lower strata is a zinc strata. So if we can find some of that high-grade silver, you know, if we start getting silver hits of sort of in excess of 1,000 grams per tonne, that's going to turn this project on its head. Again, you look at a company like Adriatic and what it's capped at, you know, with the 12 million tonnes in Bosnia. We've got 10 million tonnes here in Sweden. You add some of that silver into this, and this becomes very, very interesting for us. Again, you know, when I sort of speak to Eric up there, over here we've not done any drilling. You can see some rock chips down here at 1,500 grams per tonne. What Eric says to me is, he said, if I didn't know Sala was here, I'd be drilling over here. This is where we have these, you know, these with the folding of the geology. This is where we have these mineralized caps, and this is where it'll be pretty interesting to put some of these drill holes down. So our focus here at Sala is to continue to expand the resource, but also really looking to find some of that high grade silver. This is pretty interesting, and I apologise for the slide. As Chrissy pointed out, I am actually in my past an investment banker, and I always had young people helping me with these slides. So again, apologies up front for that. But what you can see here is that what we have here to scale is what they have at Garpenberg. So Garpenberg here, the old underground mine and the open pit, believe we're about to close this mine. When our mate Eric, who worked for Garpenberg at the time, put a 2-kilometre drill hole horizontally across. He didn't hit any mineralization, but he identified all of these anomalies here. This mine is now 170 million tonnes. It's a 3 million tonne. It produces 3 million tonnes a year and looking to go to 6 million tonnes a year. So it's a major mine. And again, when you look at Zinkgruvan in the same region, just goes to show what we may have here. It's all the same rocks. And here we are in terms of, here they are operating down at 1.4 kilometres. Sala closed off at 290 metres. So we've got some exceptional opportunities here based on what we see in the region. What Eric has actually done in the region, and he's pretty excited about where we can take this mine. I think also excitingly, when we look to expand the resource here, over half the resource is high grade. So the resource, 10 million tonnes at 4.5% zinc equivalent. Over half of that is 6%. And when you start to look at some of these intersections here, almost 5 metres at 24% zinc and 875 grams per tonne silver, it seems to me that we've got, there is some pretty big upside in terms of actually not only increasing the resource, but increasing the grade. Falun, those that we put out our announcement today in terms of sort of, buying the old Falun mine here. Falun, as I mentioned, is an extraordinary mine, producing 28 million tonnes at 4% copper and 4 grams per tonne gold and 5% zinc. And it fits into this tiny little area over here. And so here we are all around here. Eric's been walking and mapping this region for over 30 years, and you can see all the ore horizons that he's mapped over this time. So we put our first drill hole just at the end of last year, just in here at this Whitgruven prospect. It's at the end of a 3.5 kilometre trend out from the old Falun mine. And we hit 43 metres of sulphides, sort of in our first hole. So it sort of blew everybody away that we could have such success with that first hole, and really proved up this theory about this mineralised trend coming out of Falun. So we quickly went and bought that mine there. And really, I'll go into it shortly, but what we're seeing in some of the after some of the due diligence that we've got there it really all adds to that theory that not only is this a highly mineralized part of this particular region, but where we are on this mineralized trend here is very, very interesting. So where we put that first hole at Whitgrooven, here's the old Whitgrooven mine here. It stopped at about 300 metres. Our drill hole came down here about 100 metres underneath the old deposit. And look, I'm not a geologist, but here's our 43 metres of strike. And you can sort of see how this mine potentially sort of comes down through that. So as I said, it was very, very exciting for everybody. We also found this off-hole conductor. So ultimately what we're looking at for Lun is that, we've got this zinc mineralization, if you like. And what we're looking for in Falun is these tightly packed, highly enhanced sort of copper gold pods, if you like. And again, when we find this off-hole conductor here, that's pretty exciting for us and potentially exactly what we're looking for. We put a second hole down here. We didn't hit mineralization, but we hit this copper stringer mineralization, which sits in the footwall of Falun. So we're absolutely in the right area, and we must go back and sort of drill that hole. This is what we put out today. This is from, we had 1,400 drill holes that we got as part of the due diligence, and there are some pretty interesting hits here. I'm just watching the time here, Chrissy. Some really interesting hits here in terms of 50 metres at 3 grams, 11 metres at 61 grams of gold. Really, really exciting for us, and sort of not only from where we were before, but to now start to have a look at what we've got here at Falun itself is really interesting. So what's the plan at Falun? Well, we're going to, as I said, we got to go and have a look at that off-hole conductor at Whitgrooven. So we've got a step-out program that we're looking to do there. All along this mineralised trend, this 3.5 kilometres that I was talking about before, we've got a number of anomalies that have been identified that are just crying out to be drilled. So we're going to go back and drill those. And now we're going to do quite an extensive EM program around the old Falun mine, and we'll define a drill program around there. But you can see some of these key targets that have happened that have been identified in the past. The eastern zone, the western zone. Some really exciting things for us to go back and have a look at. So ultimately, what are Alicanto? As I said, Sweden for us, absolutely fantastic place to operate. As I said, from my due diligence coming into Alicanto, it was one of the big question marks for me. But having spent a lot of time with politicians last week, we've really been welcomed big time, not only federally but also at the local commune level. We've had our particularly at Sala, where we've now set up a working committee. We've had our first community meetings down there. Things are moving, amazingly quickly. But for a town like a town like Sala, where mining has been such a big part of their history, they're very keen to make it a big part of their future as well. We've got 2 key brownfields projects there. As I said, the guys here in Australia have had huge success, with the likes of Bellevue in terms of taking these type of projects and creating some real value for shareholders. The fact that they're unexplored, there's been very, very little done on either of these 2 projects. So, and again, great opportunity for us. And ultimately, we've got a great team to make it all work. Thank you, Chrissy. 15 seconds to go.
Thank you very much, Robert. That's a really interesting insight into the operations in Sweden. What an interesting country to be into. And also that flow-on effect from Russia, huge effects. I did look up Eric the Viking, interesting fellow too. He's had 6 major finds up that way. So this is number 7. Interesting to see where it goes to. Rightio, I need Mick Haynes up here, trained as a geologist and geophysicist, worked in the corporate side of the resources sector for the past 18 years, a managing director and CEO of New World Resources for the past 5 years, and he spent the last 3 of those pursuing the development of the very high-grade Antler copper deposit in Arizona, USA. Have you heard of that one? The Antler copper, yeah. So that's one of the most promising near-term development copper projects, which is on the ASX. Is it going to be one of those companies that's going to have that longevity that will fill that gap that we need for that supply that we need, the gap in demand for copper? This is the fellow that's going to share his take on it and see if we should be jumping on board with him. Will you please make him very welcome, everyone? Mick Haynes.
Thanks very much, Chrissy, and thanks very much to the organisers of the conference. It's great to be back here. To answer Chrissy's question, can we fill the gap? I think we've got no chance. I think that gap is huge. We're going to be a significant producer, but we will not be able to fill that gap. That gap is coming, and it's coming very, very quickly. Unlike a lot of copper deposits around the world, Antler can differentiate New World's Antler deposit, which we own 100% of, and we have done for the last 3 years. We can differentiate ourselves from other copper explorers, other copper producers, because we have one of the highest grade copper deposits in the world. In fact, it's in the top 30 in terms of grade. Now, it's not a huge deposit, but because the grade is so high, the economics of developing the project are extremely robust. So we know that we can bring a reasonably long mine life into operation, or a deposit with reasonably long mine life for exceptionally good margins into production, and we can manage that production, we can manage the capital costs, and we can manage the timeline to production ourselves. We won't be dependent on a major. We won't be dependent on a partner. We will be able to manage this ourselves to bring Antler into production in the near term to capitalise on the impending supply shortfall in the copper market. So we are targeting submitting mine permit applications in the middle of this year with a view to being in production for the second half of this decade when there's widespread consensus that copper prices are going to be much, much higher. Equally, at current copper prices, we have negative cash costs, and we have negative cash costs for copper because we have co-products of zinc, lead, silver and gold that make the production of copper on the prognosis that we have from our scoping study, negative cash cost for copper production. Equally, we continue to explore. We've only had the asset for 3 years. We've delineated 11.5 million tonne resource. The resource continues to grow. We've increased it 48% in the last 12 months, and we continue to explore. And we see that we can make this district bigger and bigger and bigger, but we will do that while we are taking Antler to production. And it's a great time in the cycle to be doing that. Just in terms of corporate, then our market cap is around about $110 million. We've got just under $9 million cash at bank, so an enterprise value of about $100 million. Significantly on our board, we have a metallurgist, Tony Polglaze, and he's a mine developer. Most recently developed a deposit down in Brazil for Aruma Resources that was purchased by Azure Minerals 3 or 4 years ago now for $450 million. Tony's built projects. Just 2 months ago, we recruited mining engineer Nick Woolrich to the board, and Nick Woolrich is taking a very active role in helping us develop Antler. So where are we? We're in a fantastic jurisdiction. 70% of the US's copper production comes from the state of Arizona. We are in Arizona. What's more, we're up in northwestern Arizona, where it is extremely sparsely populated, but we are serviced by exceptionally good infrastructure. Now, our land on which the Antler deposit is positioned is 100% owned by New World. We own the surface rights, we own the mineral rights, and indeed we have an option to acquire about 700 adjoining acres that are also privately owned land upon which we intend building all of our surface infrastructure. This is very, very significant when it comes to permitting and building a mine, because in the US, if you own privately owned land, particularly privately owned mineral rights, you have the right to develop them unquestionably. And this is privately owned mineral rights that we own, and they cannot be taken from us. Just zooming in, then from northern Arizona, we're about 2 hours south of Las Vegas. And our base is in a town of Kingman. There's about 20,000 people in Kingman. About 30 kilometres to the south of Kingman is a project. So we drive down an interstate highway, which is illustrated in red on this diagram. We drive south from Kingman for 20, 30 minutes to the town of Yucca, population 96 people, so very small town. But through Yucca runs a transcontinental railway line. And there's an operational rail siding there. Fantastic infrastructure. We then take an existing road. We don't need to build a road. We take an existing road 15 kilometres to the east to the deposit. And within 700 metres of the old headframe at the deposit is high voltage power. This is fantastic infrastructure. This just means it's going to be a lot easier to build a mine here. And it means it's going to be a lot cheaper to build the mine, but also to operate the mine. Things like mine camps, we won't need mine camps. There's 20,000 people living in the town of Kingman. Bullhead City, and another 40 kilometres away, there's another 30,000 people living there. So there's a workforce within driving distance. Just makes developing this project all the easier. In terms of water, recently we secured another parcel of privately owned land in a very well proven saturated alluvial aquifer that's located about 12 kilometres to the west of the project. And we know that there's water in that aquifer. We are very, very confident that there is sufficient processed water for our requirements, and we will be drilling a water well on that recently acquired private land in the coming month. About 12 months ago, I would have been standing here with a resource of 7.7 million tonnes at 4.1% copper equivalent. Still one of the highest grade copper deposits in the world. And indeed, we felt at that point we had a critical mass to develop a mining operation. But at that point, mineralisation had been proven down to 500 metres below surface, and mineralisation remained open at depth. So for the last 12 months, we have continued to drill, and we've returned some phenomenal results. We've got two parallel thicker high-grade shoots. One's a main shoot on the left-hand side of this diagram, and the other one's in the central portion is the south shoot. All of the mineralisation at Antler is exceptionally high grade. These shoots just happen to be a little bit thicker. Over the last 12 months, we've continued to drill deeper and deeper with some phenomenal results. These are true thicknesses, or maybe 95% might be true thickness, but these are extremely close to true thicknesses. We aren't drilling down dip, or down plunge of a shoot. We're drilling perpendicular to a shoot. We're intersecting 41 metres at 3.8% copper equivalent, 10 at 6, 18 at 3.5. The deepest hole on the project has intersected 21 metres at 5.5% copper equivalent. So the mineralisation remains open. That's now down almost 1,000 metres down dip from surface. Equally, in the south shoot, over the last 12 months, we've continued to return phenomenal grades, 27 metres at 7% copper equivalent in the south shoot. That is our best result to date. And the most recent result was 10.7 metres at 13.7% copper equivalent. Again, true thickness, true grade. This is a truly high-grade deposit. In fact, that 10.7 at 13.7 has not been incorporated into our resource. But late last year, so in November last year, we updated our resource. We've increased the resource base by 48%. The resource base at a 1% copper equivalent cutoff now sits at 11.5 million tonnes at 4.1% copper equivalent, with 79% of that in the indicated category. Very high confidence level. But if we want to think more about the robustness of the resource, let's apply a 2% copper equivalent cutoff. Most copper explorers would be excited to return and intersect running 2% copper equivalent. But if we take that as a base case, if we eliminate everything less than 2% copper equivalent, we still have 10 million tonnes at 4.5% copper equivalent, which means that no matter what the copper price environment is, this project is robust. It will make money. Indeed, we've got negative cash costs for copper. But if we have a high price environment, which we anticipate in the coming years, then we will make exceptional money. Now, we are currently in the throes of updating a mining study. So this 48% increase in the resource base was only declared a couple of months ago, and we have almost completed a new mine design on the back of that new resource. But just to illustrate what the potential economics of this project are, in the middle of last year, we published some economics on the base case on the 7.7 million tonne resource. Now, this may seem counterintuitive, a 7.7 million tonne resource. We see that we can mine 9.3 million tonnes of that 7.7 million tonne resource. And that's because almost all of the resource is captured by the mine design. And in order to capture that, we need to dilute the mineralisation by actually taking barren waste adjacent to the outcrop or to the mineralisation that's in situ. So with our scoping study, we anticipate, and this is on the base case, we anticipate mining at a rate of about 1 million tonnes per annum and delivering about 9.3 million tonnes to the mill over a 10-year project, 10-year life. The capex for that is $201 million, including $36 million US contingency. So the capex is very, very modest. It's very achievable that we can do ourselves. That project, again, the base case project, generates $2 billion worth of revenue and almost $1 billion of free cash. And if we discount that free cash, it comes out to 525 million pre-tax discount NPV with a 42% IRR. But significantly, in the years, and so we've got in this conceptual model, we've got 8 years where we're operating at 1 million tonnes per annum. There's a ramp up and there's a scale down, but there's 8 years in the middle of the schedule where we're operating at around about 1 million tonnes per annum. And each year, under these metrics, then we would be generating 135 million US free cash per year, almost 200 million Aussie per year. Now, as I say, we have almost completed a new mine design, new mine schedule on the 11.4 million tonne resource, and we will be publishing some results on that in the coming weeks. In terms of CapEx, 201 million, then a lot of that, 76 million, is on the processing plant. But deliberately, when we did this study, we costed a 1.2 million tonne per annum processing plant, even though the mining rate was going to be $1 million, 1 million tonnes per annum. So we may have a greater production profile from a larger resource, but we don't expect our CapEx to go up too much because we've already factored in that larger CapEx. And we've got 36 million CapEx in there. One of the key reasons we're very confident we can increase the mine life and the throughputs is because 95% of that historic resource or the original resource, our maiden resource, fell into the mine design. And it fell into the mine design because of the lateral and vertical continuity of the extremely high-grade mineralisation. So on this long section here, we're looking from west to east, and we're looking at the resource block model. Anything greater than 4% copper equivalent is illustrated in red. So we can see just about the entire deposit is high grade. We've superimposed upon that a single decline and 25 metre sublevels for underground only mining. And we see that almost all of the resource is captured in the mine design. We expect that when we do the updated mine design in the coming weeks, we expect a similar conversion. So we may see of that 11.5 million tonnes in the current resource, we may have a mining inventory of close on 13 million tonnes. What would that do? That would see us increase our copper production from 30,000 tonnes of copper equivalent metal a year to closer to 40,000 tonnes of copper equivalent metal a year, or take our copper in concentrate production from 15 to about 20,000. Not huge, but extremely profitable. The reason I say it's extremely profitable is because we've got multiple revenue streams. 51% of our value comes from copper. That's assuming $8,500 a tonne copper price. And 40% comes from zinc, assuming $2,800 a tonne zinc. The zinc pays for the operation. That's at $2,800 a tonne. Currently, the zinc price is about 12% higher, but the zinc pays for the operation. So we have negative cash costs for copper only, negative cash costs at 31 cents a pound. Larger operation, likely to bring operating costs down even lower, so even bigger margin. In terms of social environmental, we are going underground only. Low surface footprint, dry stack tailings, best practice, returning as much of the tailings as we can back underground to minimise the surface disturbance. Having a mill adjacent to the mine, minimising local disturbances, using local labour and suppliers wherever possible. On an emissions front, because of the grade, we have to use a lot less product, a lot less reagents to produce the same amount of metal. So we are going to be very, very carbon friendly. Chrissy's given me a hurry up, so I'll just mention that we've discovered one VMS, and to this point, we've only drilled 600 metres of strike and continue to drill it at depth. We know 6 kilometres to the northeast is another VMS deposit, so there's definitely a cluster of VMS deposits here, and we have a series of targets that are coincident geochemical, geophysical targets that are yet to be drilled that we will commence drilling in the coming months that provide us considerable opportunity to find additional shallow resources that can all be fed to a centralised processing plant. Thank you.
Thank you, Michael Hayes. Well presented. Right. This next fellow today, I promised just to give him a short, sharp, sweet introduction. He's got lots to get through. Come on up here, Paul Bennett. Paul is the Managing Director of Medallion Metals. Now, Medallion is rapidly growing. Their gold and copper resources at the Ravensthorpe Gold Project. Who's been through Ravensthorpe recently? Absolutely thriving. It's just the tourism sector is big, but the influx from the mining is really, really big. And I've been going down there for the last 20 years. It's quite remarkable. Now, Paul, you guys listed back in 2021. You've been really, really busy. They've actually completed 54 kilometres of drilling. They've expanded their resources to 1.6 million ounces of gold equivalent. So he's going to tell us about what he believes is a golden future in Ravensthorpe. Would you please make him welcome to the stage?
Thanks, Chrissy. Thanks to the organisers and sponsors and everyone who's in attendance to hear the Medallion story. We're an advanced gold and copper explorer. We've got a portfolio of assets down at Ravensthorpe in the Great Southern that have got a great deal of potential. Our aim is to build the project resources to a critical mass that will support the development of a long life, low-cost gold and copper operation in Ravensthorpe. And I'm going to talk to you today about what the Medallion team's doing to make that aim a reality. The presentation is lodged on ASX. It's a general update. It's not an offer or advice. So junior gold equities, really tough space of late. It's a crowded space. We're competing for capital. We're competing for attention with a host of other explorers. And I think these points, when they're taken together, are what set us apart from the competition. First and foremost, Medallion controls the majority of a greenstone belt in Western Australia that's fertile for gold and copper. These assets are increasingly rare, and I think we'll demonstrate that this one in particular will be extremely valuable. The asset's 500 kilometres from Perth. The access, the infrastructure is outstanding. There's two major resource projects underway in the local government area. It demonstrates Ravensthorpe really is an enabling jurisdiction for what we've got in mind. We've got scale, we've got grade, 1.6 million ounces gold equivalent now at 2.6 grams. That deposit is shallowly drilled. It's open in multiple directions. It continues to grow in terms of both scale and in confidence as we continue to invest in it. The asset's de-risked. We're on granted mining leases. We're clear from a heritage perspective. We've advanced the permit substantially. There is a study underway to demonstrate the technical and the commercial merits of that project. We're very confident that that piece of work will demonstrate that Ravensthorpe's got a very bright future indeed. We've been able to continue to access capital in what has been a tough market. That's let us continue to be active on the ground. We've drilled 54,000 metres to grow that resource, to advance the regional targets, and all of that's being done with the strategic objective of establishing that critical mass of metal to build a mine. Now, internally, we think that's 800,000 ounces on a gold equivalent basis. That gives us a 100,000 ounce per annum run rate for a minimum of 8 years. We think that's a bankable project. We're very confident that the Cundit Mining Centre can yield that critical mass, and then the regional exploration opportunity is just upside from there. Just touching on the corporate, 230 million shares out. We showed cash of 2.8 million at the end of December. We have an investment in our neighbours Nickel Search. There is a loan from our major shareholder. It's only repayable upon a change of control event or if we make a decision to build the mine in Ravensthorpe. We've got a market capitalisation of $32 million. If you adjust for the debt, the cash, the listed investment, it backs out an EV of $32 million or $20 an ounce on a gold equivalent basis. That is a steal for the quality of those ounces. In terms of leadership, those names, they'll be well known to people who know the sector. In WA, John, long-term prominent board member at Northern Star. He's been a chair of a number of success stories at the junior end. Ed's running London Metals, achieving great things in Kambalda. Similarly, Tony is running Galena. He's building something of real significance there at Abra. Those fellas are at the forefront of the industry. They're at the forefront of capital markets, and we all share a vision of there being a mine in Ravensthorpe in the near future. And that experience is also a great overlay to what is a really young, talented, hungry senior executive team that's driving the growth of the business, driving the growth of the assets. So focusing in on the flagship asset of Medallion, the Ravensthorpe Gold Project. Medallion has the majority of the land holding in the Phillips River mineral field. And critical to that, are the tenements that straddle the Annabelle Volcanics. Now, these exist around the periphery of the Ravensthorpe tonalite. They're mapped in yellow on this plan. And it's these rocks that have hosted all of the historic production. They are host to all of the known prospects, all of the known resources. They're also host to the pegmatites that Allkem are mining at Mount Catlin. Now, there's been 130,000 ounces of gold, 20,000 tonnes of copper metal produced from this area over the journey from 3 clusters of mines at Ravensthorpe in the north, down at Desmond Alverton on the southeastern flank of the belt, and then at the southern end of the field at the Cundipp Mining Centre, where the Archean dips beneath the Proterozoic. Now, that historic production in gross metal value terms in today's prices is a rough 50-50 split between the gold and the copper. So we think copper is going to have an increasingly important role to play in the Medallion story. We're certainly seeing that in the drilling at depth at the Cundipp Mining Centre. Now, it's at Cundipp that the bulk of the resources are estimated. This is where the bulk of the expenditure, the bulk of the activities been happening. This is where the growths really come from. Just a short history lesson. This is a chart of the historic drilling that's taken place at Medallion's tenements over the last 45 years. And as you can see, pretty sporadic levels of activity. And then when something has happened, it's generally been at relatively low levels. Now, that's mostly been because of fragmented ownership in the early part of the time series. But then when their tenements were amalgamated, they again suffered because the former owners had competing corporate priorities. And it wasn't until Medallion came along that the requisite focus, the requisite investment was brought to bear on the asset. 54,000 metres of drilling done thus far, and we expect those rates of activity to continue into the future. Also, it's interesting that historically and since we've been involved, it's been Cundipp that's getting all the attention. Now, Cundipp represents approximately 2.5 kilometres of the prospective strike of the overall 40 kilometres of prospective stratigraphy that we control down there in Ravensthorpe. So the regional exploration opportunity really is underdone. And while capital remains tight, it's difficult to push that opportunity as hard as we'd like to. So we remain focused for the time being on Cundipp. We're growing and de-risking that asset in parallel. And I think you'll see we're really starting to get some runs on the board. So on Monday, we updated the global mineral resource estimate for the Ravensthorpe Gold Project. That resource estimate now contains 44 kilometres of new drilling that we've completed since we listed in March of 2021. There's now 1.3 million ounces of gold, 59,000 tonnes of copper metal on a combined basis. That is 1.6 million ounces gold equivalent at 2.6 grams. We have increased the overall metal endowment of the project by 112% since we got going in March of 2021. 63% of the resource is now in the indicated category. So that's a high degree of confidence in roughly 1 million of those gold equivalent ounces. 76% of the resource is within 150 metres of surface, so potentially available for open pit mining. The grade's holding up, gold only terms, 1.8 in the open pits, 4 in the underground. There is a significant copper credit. Gold drives the project economics of this deposit. The copper enhances it. Now, we found those gold equivalent ounces for $15 each. That's still not a bad business model considering we are, in my view, lowly valued. We're finding them for 15, they're getting valued for 20, and there's still plenty of upside on that valuation. And every metre that we drilled has added 20 ounces on a gold equivalent basis into that resource. Now, we have demonstrated now that if you invest in this asset, it will continue to grow. These known structures, they're open at depth, they're shallowly drilled. They'll continue to expand if we continue to invest in them. Additionally, a third of the drilling that we've done since we got going is diamond. So we have never had that level of diamond drilling in the database previously. We are seeing the rocks, we're seeing the geology, the structure, the ore body in the flesh to a greater extent than we ever have done before. That's led to a step change improvement in our understanding of what's controlling this mineralisation. So as well as extending these deposits, we think there's a great potential to find new structures in close proximity to the resources and all within a 1.5 kilometre radius of where you might locate the processing plant to treat this material. Here's another way to think about the growth. This is a Cunditt Mining Centre resource looking in long section to the west. The gold-only ounce per vertical metre profile here averages 4,000 from surface to a depth of around just over 300 metres and along a strike length of 2.5 kilometres as we currently understand it. That ounce per vertical metre profile peaks at 7,000, 100 metres below surface where the data density is at its greatest. Now, we are adding data along strike, we're adding data at depth, we're adding resource along strike and at depth. So we think if we can achieve an average ounce per vertical metre profile here of 5,000 from surface to a depth of 500 metres below surface, which is still shallowly drilled for an Archean gold lode system, then this area starts to get really interesting in terms of its scale and significance. It's a great address. It's got great potential. We think multi-million ounce potential with continued investment. Now, I've spoken a lot about quantity of ounces. What about the quality of them? We're really interested in what proportion of this resource can convert to mine plan in the future. We think the project's value, by direct extension, the company's value is massively leveraged to increases in this resource that lead to increases in the mine plan. So that means finding economic ounces. We've run open pit, underground optimizations on this resource based on the parameters that you can see at the top of the slide, and the results are extremely encouraging. So you don't need to squint your eyes to see that this is starting to look like a gold and a copper mine. So I should stress that what I'm about to talk about is not a reserve. This is a diluted subset of the previous resource. So we'd expect these results to improve if we ran this same analysis on the recent resource update. So 75% of the metal, roughly 1 million ounces, is optimizing into those diluted open pit and underground shapes. And of that, 58% of that metal is in the indicated category. The strip ratio of the pits is running at 6:1. The grades, they're at the same grades that we were reporting in the previous reserve estimate when you report them above those cut-off grades. So what we are seeing here is geometric continuity. We're seeing grade continuity. Importantly, this deposit is withstanding the dilution it will inevitably confront when it comes to get mined. So this is really important in terms of when we're thinking about firing up the drill rigs again, what the focus is going to be. There is obviously going to be a significant infill component here to make sure that we maximise the amount of metal that's reporting into those shapes in the indicated category. So where have we been? Where are we going to? The business has been extremely active since we listed. We've completed 54,000 metres of drilling. It's given the business momentum. We want that to continue through 2023 and 2024. 1.6 million ounces gold equivalent is sufficient to commence the studies. We've got a PFS underway. The results of that work will be available towards the middle of the year. Obviously, drilling again will have an infill focus. Again, we'll be looking to grow Cunditt, but at the same time, improve the confidence of it. So this 2023 is really all about de-risking and growing Cunditt in parallel and also optimising the preferred development pathway here. Now, again, capital markets are tight. It's hard for us to push the regional exploration opportunity as hard as we'd like to. It's not going anywhere. It represents tremendous upside. But if things freed up, we would certainly get out and test some of those earlier stage, potentially higher impact targets. So to wrap this up, we think Medallion's a compelling opportunity for investors who are seeking exposure to advanced gold and copper exploration in WA. The business is well run. It's attractively priced relative to its peers. We own assets with great potential in a great jurisdiction. We are absolutely laser focused on maximising dollars into the ground on smart investment that's going to increase the value of those assets for our shareholders. The resource is growing in terms of size and confidence all the time as we continue to invest in it. The regional exploration opportunity, it's real, it's extensive. We may not test it in the short term, but it's not going anywhere. So if you haven't taken it, I'd encourage you to take a closer look at Medallion. If you haven't done so already, check out the website. There's a lot more information available there. If you'd like to speak to us, please contact us. We're always eager to discuss what's going on down at Rovira. Thanks for your time. Thanks, Chrissy.
Yeah, one heck of a smooth operator, Paul. Thank you very much. And Ravenstop's future certainly looks very, very, very interesting. A number of people listening to your words there, Paul. Ian Prentice, can I invite you to join us up here, please, sir? Now, Ian has served as director for a number of ASX-listed resource companies with activities ranging from exploration and project acquisition in Asia and in Africa through to gold production in Australia. You've got over 30 years of experience in this industry, so a bit of knowledge under your belt, and he's decided to found and manage his own little organisation. He's the Director of Technology Metals Australia Limited. So we're going to talk the allure of high-grade minerals, low operating costs, and a metal that we haven't heard a lot of in the last 24 hours, and that is vanadium. Would you please make Ian very welcome?
Thank you, Chrissy, and thanks to Stu and Jackson and the team and the sponsors for putting on the show for us. Good morning, everyone. Thanks for hanging around. The ones who just left are going to miss out on a great story. Bit of a change of pace. We're talking about developing the world's next primary vanadium deposit. And I guess part of all that, the key of that is why we're doing that. Vanadium is recognised in the Australian context, at least, as a supercritical mineral. So as we move into the transition to move away from hydrocarbons and towards net zero, vanadium has a massive role to play, and the Australian federal government recognises that. So we're at the forefront. We're one of the leaders on developing a new primary mine here in WA. This presentation is on the platform, so you can take your time to have a read of that and go through all the details. Key for us and a big theme for this presentation is about Tier 1. So we are developing a vanadium project in a Tier 1 jurisdiction. So obviously here in Western Australia, it couldn't be a better place to be developing a project. Access to key infrastructure. We're getting an APA group building a gas pipeline to access into our fantastic or tap into our fantastic gas resources that we've seen a bit of interest in the Perth Basin of late. Great access to ports, critical minerals that I've already mentioned. One of the key things we just announced recently is also we've got reach out, I guess globally, we've just had a letter of interest from the Export Credit Agency out of Denmark for $150 million worth of support for the funding of the development of the project. We've got a very strong focus on our downstream side, so not just digging it up and turning it into vanadium products, but then adding value to those products. And as I mentioned, it's all about this energy transition. So Tier 1 project, very large, high-grade resource base. New resource out in November of last year. One of the keys of that, and it's probably a little bit hard to read on that map, but we've now got 63 million tonnes measured and indicated resource. A big focus of the work we did last year was really boosting that measured component. So 63 million tonnes, as it says, that gives us over 25 years mine life. So this is a long life project that's going to be delivering probably in excess of 6% of the world's vanadium. So very significant asset. And also, the EBITDA numbers there, sort of 180, 200 million Aussie a year over 25 years in average annual EBITDA. So very, very attractive and delivering really high purity product, which, vanadium is a battery metal and high purity is always key in that. So Tier 1 project, then what we've been doing is really building up Tier 1 partnerships. So that slide sort of sums it up. Tata Steel, MOU with them last year around a bridgehead into India. Focus on the steel market, but India is also a huge market for renewable energy and stationary storage. So fantastic bridgehead there. LE System, our Japanese partner, again, very, very important player in the vanadium solid battery space. Great partnership there. EKF, I mentioned, a letter of interest for $150 million of support for us, which is linked to FL Schmidt, who are equipment suppliers. They'll be providing the main pyro, the main roasting section of the plant. They've been involved with us all the way through. So test work all the way through to design and now this implementation of the project. And as I mentioned, APA are going to be building a gas pipeline to get some of that fantastic natural gas out of the Perth Basin up to us at near Meekatharra there. There we go. What we're doing at the moment is we're in an implementation phase. So we did an integration study which brought two of our projects together last year, which resulted in that updated resource that we delivered. Now we're in the phase of moving through into implementation of that. We're in the midst of a commercial tendering process, bankable models, really just moving along through all the pathways to get to a point where we're ready to actually start construction. A couple of key things there around ESG and what we're doing in that space. critical in getting a group like EKF, an export credit agency out of Denmark, involved in the project is really addressing around our ESG components, engagement with traditional owners, and then our moving through the environmental approvals pathway. And that flows through, sustainability. And sustainability is always an interesting thing in mining projects, but it's really engaging with community, making sure that our environmental footprint is as low as it possibly can be, and through into our governance. And we're very strong on all those key factors, and as we progress through into development. A bit more about vanadium itself. Historically, vanadium has been majority used in steel, a steel alloying agent. We know that by using more vanadium in steel, you can use less steel for that application. So that flows through to carbon emission reduction. So that's a really key part of the industry. That's why Tata are talking to us about getting vanadium into Indian steel to really try and reduce that footprint there. But also really interestingly is the vanadium redox flow battery. We listed this company back in 2016 on the back of vanadium redox flow batteries. It's fair to say probably in the last 12 months is really when they've had the real, the momentum is coming into that space, and it's all around long duration storage. Fantastic to make sure that the renewable energy that we're generating is far more efficient and effective in its use. So massive carbon savings credits going through into that space. Just quickly on, I guess it's a bit of a common theme for a couple of these critical minerals around the place. Where does it come from? So currently we're seeing almost 80% of vanadium is sourced from China or Russia. Now, clearly for the Western world per se, that's not where you want to be sourcing your product from. So massive opportunity for jurisdictions like ourselves to really come into that space. You can see there that South Africa is the third biggest producer. So it's a very interesting commodity on that aspect. Australia has got the third largest economic reserves of vanadium and currently no production. We're set to change that. So we'll be coming along the line to bring that production in and then servicing into Europe and servicing North America, servicing our friends in Japan and Korea. The other real key thing there is that vast majority historically of production for vanadium has come as co-product. So big Chinese steel mills that are operating on low-grade magnetite ore bodies that have got a bit of vanadium in them. They've been the biggest supplier of vanadium as that byproduct. Now, they can't react to supply or demand changes. They're really there to make steel. So they can't just turn up the steel mills to make more vanadium. So where the new production is going to come from is from primary producers. This chart just sort of shows, I guess, the last 12, 18 months of price action in vanadium. Vanadium has had a bit of a history of a bit of volatility, and over time it's had some pretty nasty lows. I think we're outside of that space now. I think the battery side is really going to put a big floor under the price. We see there sort of at the beginning of last year, when Mr. Putin decided to cross the border into Ukraine, there was a spike in vanadium price because concerns around that interruption to Russian supply. That sort of eased off as the Chinese lockdowns bit fairly hard on the whole demand side. But what we're seeing now is China's opening. There's a really big movement, particularly in Europe, that they don't want to be sourcing product out of Russia. And we're now seeing a vanadium price that's well over $10 a pound in Europe, and it's a very, very strong supportive price. I guess a bit of context around that. We did a DFS back in 2019, so a little bit out of date, but our operating costs back then were $4, a touch over $4 a pound. So having a vanadium price over $10 a pound offers a very, very attractive margin for us. Now, this is, again, where we see massive growth in our market coming through, consumption into batteries. Now, this is some work that CRU have just done for us, looking at the market and looking at projections out over the next 10, 20 years. But they see vanadium consumption in batteries being by far the biggest part of the market. And you can see there through to 2030, 2040, will be over 70% of the vanadium market will be consumed into these vanadium redox flow batteries. Yeah, that's a complete change of the dynamics of the vanadium market, and that's where we're really setting ourselves up to be positioned to take advantage of that. We've also seen, and some of the other presenters have talked about it, what's happening in the US, what's happening in the EU about support for critical minerals, support for long duration stationary storage. There's a lot of investment going into that space. We've superimposed there on the chart, just in the little red box there, what our annual production would be. So that new demand that's coming through is huge. We're going to be a significant producer, but we're going to need a lot more of us coming along the turnpike to really fill that space. Just a bit of a snapshot. So I guess vanadium redox flow batteries aren't well known of, albeit that they were originally, I guess, developed in the University of New South Wales in the mid-1980s. It's been a bit of a slow burn. As I say, the last sort of 12 months or so, it's been getting a lot more momentum. But going back a little earlier than that, you see that Sumitomo Electric put a battery in place into Japan in 2015, and there's a number of very large-scale batteries that have been deployed around the globe. And right now, I guess the real focus is particularly into North America. China is putting the biggest batteries in place, but they've got their own domestic production, so they're sort of self-sufficient on that space. But in the US, they're very reliant on importing their vanadium for these batteries, and so it's a massive market opportunity. Now, the big difference between lithium batteries and vanadium batteries, I've got a chart in some of the other presentations, and we can talk about it at our booth later on, but where the difference is between why you're going to apply a vanadium battery rather than a lithium battery. But the nub of it is these are long duration storage. The sweet spot for these are anything from 4 hours to 12, 20 hours of storage, as opposed to a lithium battery, which might be in that 1 to 4 hours of storage space. They are a different chemistry. They're a liquid electrolyte, so they're much safer. You're not going to have any thermal runaway. Sustainability is a big thing for them, which is really attractive as we move into this ESG environment. The vanadium in these batteries are 100% recyclable. So end of a 25-year life of a battery, you can just take the vanadium out and repurpose it. So it's got a lot of very strong green credentials. What we're doing in that space, and we put out an announcement yesterday morning around what we're doing with our partners, LE System in Japan. We've now demonstrated we've taken ore from the MTMP, we've taken that all the way through to all the test work, to roasting, leaching, producing our vanadium product, and then going through to producing vanadium electrolyte. LE System is a leader in the vanadium battery space. They've got a very large vanadium electrolyte facility in Japan. They're servicing some of the biggest battery companies in the world. Their operation has been verified by those groups. So our product going through to producing high purity electrolyte is really a big tick for us to say that we can supply into those same customers. So just wrapping it up, corporate overview, as I mentioned earlier, we were listed in 2016, so we've been around for a little while now, only 210 million shares on issue. We had 12 million cash at bank at the end of the year, so a nice comfortable position. Resource Capital Funds is our largest shareholder. They came on board in a capital raise we did at the back end of 2021. So sitting there around 17% of our register, a very, very nice supportive shareholder for progressing the development of our project. We do have a very, I guess, talented and experienced board and management team. With the, I guess, new additions over the last couple of years, with Jackie Murray coming on board as part of the RCF transaction, and then more recently Dr. Carmen Letton joining us last August. Fantastic professionals in this space, both from taking projects into production, but also in that ESG space, as I say, very, very important. Then on the management side, David English is our Chief Operating Officer. David's actually built a couple of the major projects here in Western Australia over the journey, but he also spent time operating in a vanadium project, operating at Windamara. So fantastic experience to have in the team. And then Alicia Civil, our most recent, I guess, new team member, came on board, came out of FMG as our CFO, and really part of building that team through to delivery of the project. So we believe we're a very, very compelling investment, developing a critical minerals project in a tier 1 jurisdiction, really well placed for delivering into this, I guess what we're all seeing as a cleaner future that we're looking for. Got a great team that's going to be able to deliver on that project. And we believe we've built up a really strong list of tier 1 partners to help us through into that delivery phase. And thank you very much. Come and see us at booth 30.
Thank you, Ian. Prentice. Now, when you check the markets this morning, we've seen a little upward tick next to our next presenter, Turaco Gold. If only they'd presented this time yesterday morning, maybe a different story for some of us. Not to worry. They were noticed actually as one of the ASX's best performing small cap stocks for Tuesday. What's the interest It is a leading gold explorer on the Côte d'Ivoire in West Africa. They actually have, they're the largest grant holder in the highly sought after Beryllium Greenstone jurisdiction. This is the man in charge, their MD, Mr. Justin Tremain. And Justin is part of an impressive management team at Turaco, who've got a really nice little history between them of successfully generating shareholder value by making economic gold discoveries. They prove them up, and then they have them acquired by larger gold companies and turn them into very successful ventures. So let's see what he and Turaco can offer us today. Please make him welcome.
Well, thanks, Chrissy, and thanks, RIU Vertical Events, for the opportunity to present today and for the audience to come in and listening to Turaco's, the overview of Turaco. Most of you would not have come across Turaco previously. It's a relatively new company, represents the consolidation of a number of exploration projects in West Africa, in Côte d'Ivoire, by a management team that has done it previously successfully in Côte d'Ivoire and making new discoveries, grassroots discoveries, taking them through to resource definition, ultimately takeouts by larger mining companies, but also in other developing jurisdictions before Côte d'Ivoire as well. So it's the same team. We have multiple projects, so we're diversified. As Chrissy said, we're the largest landholder in Côte d'Ivoire with over 7,000 square kilometres. But the benefit of having multiple projects, I think, has really been demonstrated in the last 12 months, the first 12 months of existence of this company, where one of our lower priority projects has really come to the forefront with a new discovery, and that's at our Ardea project, which I'll really focus on today, because that's really come our priority now as we define a resource from a grassroots discovery there. And we expect that to emerge as to one of the next big discoveries in West Africa. The reason the team is successful is because we don't sit idle. So last year, first year of Turaco, we did over 70,000 metres of air core RC and diamond drilling, plus in addition to that, a whole lot of auger drilling, and acquired high resolution magnetics over all of our 7,000 square kilometres. So we're very, very active. And in fact, with Turaco and the predecessor company, Azure Resources, I'd say we're the most active exploration management team in Côte d'Ivoire over the last 5 years. And that's what results in discoveries. Currently capitalised at about $25 million, I think ticked up a little bit yesterday. And there's our sort of team there. We're still well funded with about $4 million of cash in the bank. John Fitzgerald, our chair, who was also the chair of predecessor Azure Resources, and I've worked with John off and on for the last 20 years. He's a preeminent sort of resource director, long-standing Northern Star non-executive director there. Alan Campbell, another non-exec director, was responsible for the discovery of probably the biggest deposit in West Africa in the last 10 years, the Fekola deposit, which is now, I think, over 10 million ounces in Mali. Bruce, who's also a non-exec director, who's a very experienced geologist in West Africa, and is actually the head of exploration for Resolute Mining. And then Elliot, our chief geologist, who was also the chief geologist with Exor. And our team in Côte d'Ivoire is essentially the same team that came across following Perseus's acquisition of Exor and then the establishment of Turaco, and came across, sort of all worked together previously. So here's our position in Côte d'Ivoire. Now, I think we've all heard of how prospective West Africa is. I think the stats are that it's been over 70 plus 1 million ounce discoveries in the beryllium in West Africa. But more importantly, about 50% of them are plus 3 million ounces. And that's what our target is on each one of those projects. We would not be interested in these projects if we didn't think each of those projects on our own had the potential to deliver that scale of discovery. So we've got 4 projects in north part of Côte d'Ivoire, the Odini, Tonga North, Bundiali and Furki projects, and this Ardea project in central Côte d'Ivoire, which, as I said, has now become our priority with unbelievable drill results from the first program. And we've completed 30,000 metres of drilling there. We'll look to release a maiden resource there shortly, but that will continue to grow, as I'll show you. There's, in addition to that Ardea discovery, we also have discoveries up on the northern projects at Bundiali and Furki, which are significant, but certainly where we see most value, quickest value for our shareholders is at Ardea. So just zooming in on the Ardea project, comprises of 2 granted exploration permits, the western permit, which we call the Bouaki North permit, and then the eastern permit, just to the right of screen there, the Satama permit. So they combined granted position there about 700 square kilometres. These 2 permits are only about 15 kilometres apart, so we really group them into the one project, the Ardea project. but it's on the eastern permit, the Satama permit, where we've made a new discovery on the edge of a sedimentary basin called the Kamo Basin there. This project, this permit had no exploration 12 months ago before us acquiring the project. So it's a truly grassroots discovery there. We initially defined a soil anomaly there from regional soils and some infill soils that you can see there in yellow, and that's a 10-kilometre long soil anomaly along a structure that comes off the what's called the Ume Fedicro Greenstone Belt, which is where our Bouake North permit is located. And that belt actually represents the extension of the Houndé Belt in Burkina Faso into Côte d'Ivoire. And the Houndé Belt is known as probably one of the top 2 or 3 gold belts in entire West Africa. So it's very prospective. In fact, just to the north of us, we have Endeavour, the biggest producer in West Africa now, developing a 2.5 million ounce project. And to the south of us, we have a couple of operating mines, the Bonacro and Agbao mines. So this is in definitely the right address. So just zooming in onto this, initially we defined that anomaly, and then we quickly started auger drilling in that about 12 months ago. And we defined about 4.5 kilometres. We only tested about 4.5 kilometres of that 10K anomaly with auger, and we confirmed in situ saprolite mineralisation over that 4.5 kilometres. So we quickly followed that up with a couple of phases of air core drilling out the oxide zone, which goes down to about 80 to 100 metres. And then followed that up with a couple of programs of RC to extend that down to about 120 metres. Whilst we were doing that, though, we also then undertook what you see here is ground IP geophysics, which was really looking at what you see here is the chargeability signature. And you see the area onto the right where all the dots are. That's the drilling that we did before we had this IP anomaly. And we knew what we were drilling, which was free gold in quartz veining and some pyrite sulfide mineralisation. And so what you see in that yellow-green zone is the chargeability signature of the sulfides. And if I showed you a resistivity anomaly, which picks up the quartz veining, which we know carries gold from the drilling that we've done. But what this IP really highlighted is these parallel structures out to the west, which have equal or better chargeability signatures as to what we've drilled and we know is mineralised, but also longer strike lengths. So it really started to show the potential for not just a gold deposit here, but a really large gold system. So just zooming in on the area that we've drilled and we know is mineralised. This is where our 30,000 metres of air core RC drilling has gone into, and we've drilled 2 kilometres now of very continuous mineralisation on 80-metre drill sections that you can see there. And the continuity of gold and grade is very good from section to section across those 80-metre sections. And so that's what we'll be looking to put out as a maiden resource. And as I said, we've drilled that down to about 140 metres, very deep weathering, which will be very good for economics down the track in terms of metallurgy and mining costs, down to about 80 to 100 metres. But importantly, we've stepped back and drilled and proven that extends, the mineralisation extends into the fresh rock down to about 140 metres here. It's completely open, this structure here. Particularly to the north. The last drilling that we did was a few holes up to the north there, and that actually returned our best results to date. So that was only about a month ago, which included 26 metres at 4.8 grams per tonne. And if I just cut a long section and cross section through that area there, on the left you see a long section there. It's a very high grade subtly plunging chute there that's basically plus 100 gram metre chute there. And that sits within that 2 kilometres of continuous mineralisation. It's really demonstrated potential for us to infill those 80-metre sections and define multiple high-grade plunging chutes along that 2 kilometres, which is going to add a lot more ounces and, importantly, add a lot more grade to this 2 kilometres of mineralisation there. You can see on the right, the cross-section, it's multiple zones as well, mineralisation, not just one zone. So then just touching on the potential out to the west there, this is the IP survey, again, the dipole, which is looking at sections of the IP response, and you're seeing chargeability response here as well. The right there, you can see where our drilling is, where we know it's very well mineralised. To the west, that very large chargeable structure, about 4.5 kilometres of strike, so twice the strike length, has a much stronger chargeability signature at depth, indicating sulfides at depth. A geophysicist was convinced that was a sulfide response. So just in the last few weeks, we went and put auger drilling across that on 400-metre spaced auger holes. And these are just 8-metre, 10-metre holes, drilling down to the saprolite, taking a bottom of hole sample. And the results from auger we've got over that structure to the west are much better results than the auger results that we got out to the east, where we've subsequently drilled out 2 kilometres of mineralisation. So we've got better auger results in terms of width of mineralisation at the basement and longer strike length, about twice the strike length there. So we can see this system really doubling, tripling or more from whatever we put out as a maiden resource shortly on that eastern structure, which itself is open. And there's obviously the results that came from the auger and drilling on that. And then to the west on our Buwaki North permit, as I said, about 15 kilometres away. This permit was only granted about 12, 15 months ago. So we haven't really done any drilling here yet. We've just done systematic exploration, which is ultrafine stream sediment sampling. And then we follow that up with soils and then ultimately drilling. What you see here is the results of that stream sediment sampling. And I'll just draw your attention to the orange, red and pink zones. Now, these are orange is plus 25 ppb gold in streams. Red is plus, I think, 50 and the pink is plus 100 ppb gold. Anything over 10 is going to result in a soil anomaly and a drill target. Anything over 50 ppb is really indicative of a plus million ounce deposit in that catchment area. And we have multiple of those catchment areas. And this, as I said, sits on one of the best greenstone belts in West Africa. So we have no doubt that we're going to find ounces here, and they will complement what we're drilling out just to the east at that Satama discovery. And then, as I said, we've got other projects. So Bernie has sort of really come to the forefront with the drilling results over the last 12 months, but we have 4 projects up in the north of Cote d'Ivoire as well, which includes discoveries. But we're currently working at the Odini project, which is an unexplored piece of ground that we've defined a very large anomaly there that sits on the edge of the Sagiri Basin, which is obviously the most prospective domain in Guinea, which has delivered very large deposits, and that basin extends into the northwest of Cote d'Ivoire, and we're just starting to explore that Odini permit for that. And then our Bundiali, Tonga North and Furki projects. Tonga North represents a very large package of about 1,500 square kilometres granted exploration ground surrounding Barrick's Tongan mine, which only has about a 1 or 2 year mine life left. So it's quite a strategic position and covers all of the greenstone belt up to the Burkina Faso border. And then the Furki project, where we have a discovery. We'd like to be drilling it, but our priority at the moment is on Ebernia. So quickly on the Odini project, just in the last couple of minutes, you can see our permits just to the right corner of the screen there, covering the volcanics that extend from the Sagiri Basin into northwest Cote d'Ivoire. Never had any exploration before. We've, over the last 6 months, flown high-resolution magnetics over that, which clearly showed that the margin of the Archean runs straight through our projects there for 30 kilometres. We soil sampled that, and not surprisingly, that structure is just lit up in geochemistry, and we've got a 30-kilometre anomaly. Within that, about 10 kilometres of very coherent plus 100 ppb gold anomaly. We're just starting doing auger drilling across that 10-kilometre zone now, whilst we also infill the rest of the permit with further soils. And then on the Furki project, just touching on up on the north there on the border with Burkina Faso, we haven't really got around to start following up the previous work by a previous explorer here, an unlisted company called Turaco Gold, where they defined a 16-kilometre structure here with anomalous geochemistry that you can see in yellow there. Did a bit of reconnaissance drilling and got onto a discovery, what they call Warigi South, the southern end of that 16-kilometre structure, which is an intrusive related gold deposit there. They only drilled 18 holes before that company was bought by Resolute, and then this project stopped about 3 years ago. And you'd see the results from just 18 holes there, exceptional 20 to 50 metre intersections at sort of 1 to 3 grams per tonne. So that'll be the next cab off our rank when we get around to following that up and drilling a resource out there. And then Tonga North, I've touched on, very large package. So just summing up, we've done it before in West Africa and other developing jurisdictions. We discover new deposits, grassroots deposits, take them through resource feasibility, ultimately development. But in a place like West Africa, there's no shortage of potential corporate interest once you get onto what's going to be an economic plus 1 million, 2 million ounce deposit. And that's what's happened in the past with this team. And we are the most active, and you'll see that continuing over the next 6 months. We're in the middle of the dry season, so there's no excuse for us not to be drilling. So you'll see lots of news flow over the next few months, and I'd encourage you just to keep an eye on Turaco over the next few months. Thank you very much.
Well wrapped, Justin. Very impressive ending there. All right. While I've got all of your attention, 5:30 today, we have drinks for everyone. I've double checked this and I am correct. We are all invited as attendees out to drinks thanks to Canaccord today. So question for you, what do you get when you intersect high-grade lithium mineralization in a drill hole that you have specifically set for a nickel target? I've got my suspicions of what might have gone on in the lab when they discovered this. And Azure Mining is a company dealing with this pesky little problem, which you might like to describe as potentially too much of two good things. And a result, they've been in the mining news a lot in the last few days, haven't you? So this, as luck would have it, they are obviously our next presenter here at RIU. And this is their MD, Tony Rovira. And he's going to talk us through a little patch of dirt that seems to be punching above its weight in terms of mineral endowment. Welcome, Tony.
Thanks, Chrissy, and thank you very much, ladies and gentlemen, for the opportunity to talk to you about the Azure Minerals story, and in particular the Andover Battery Metals project. As of a few weeks ago, that was the Andover Nickel project, but it's also now become the Andover Lithium project, along with some copper and cobalt as well. So we seem to be ticking a lot of the boxes when it comes to the battery metals commodities. Firstly, an acknowledgement to the traditional owners, the Ngalama people on the land in which we operate. We could not be working there without their approvals and their acceptance of what we're doing out there. So we do thank them for their cooperation in what we're doing. Corporately, just a quick snapshot there. The company's got $10 million in the bank at the moment. Market cap's a bit over $100 million. We have our major shareholders, Mark Creasy, and closely followed by the German Deutsche Balaton Group. But the third one there is SQM, new to our register, currently sitting at just under 5%. And the second part of the deal that we've just executed with SQM is that they'll be committing another $15 million into the company for a total of $20 million for 19.99% of Azure. And to have the world's largest or second largest lithium producer coming on board with such a strategic cornerstone stake in our project, in our company, is a real tick in the positive column for the potential for lithium on our Andover project. So Andover is located in the West Pilbara region of Western Australia. It's located about 5 kilometres south of the town of Roebourne and about 30 kilometres east of Karratha. It's one of the best located from a logistics point of view, a mining project anywhere in Australia. So just to the south of us, we have all of Rio Tinto's iron ore mines. To the north of us, just offshore, is Woodside's oil and gas facilities. The Chevron gas facilities are there on the Burrup Peninsula as well. So all of the infrastructure you could possibly want for a mining project is located very close to where we are. We have a gas pipeline that crosses the tenement. We've got highways, roads, potable water supplies, high voltage power lines, everything you could possibly need. The Andover project's about 808 square kilometres. So a relatively modest sized project, but within that area of that project, we've located and drilled out 2 nickel, copper, cobalt sulfide deposits, and with multiple other targets yet to be tested in that space. And we've also recently been announcing a lot of identification of numerous outcropping lithium-rich pegmatite bodies on the project area as well. So that's we are actually got a serious amount of battery metal potential on the project area. In terms of the nickel side of things, with Mineral Resources, with, as I mentioned, 2 deposits, the Andover deposit and the Ridgeline deposit. Andover was announced in March of last year. Ridgeline was, we announced the MRE for that only a week or so ago. Combined, there's a total of about 6 million tonnes of nearly 1.5% nickel equivalent for just under 100,000 tonnes of contained nickel plus copper plus cobalt in those 2 deposits located right next door to each other. So that's a very, very attractive project right there and then. And so we are continuing with our growth strategy. It's a dual pathway, both the nickel, copper and cobalt on one hand and the lithium on the other. So exploration, resource drilling, development studies are all underway as we speak on both of those. One of the great benefits of working on the Andover project is basically all the rocks stick out of the ground. Those rocks are over 3 billion years old and they're still there in pristine condition at surface. And that enables us to do traditional boots on the ground exploration. So geological mapping, rock chip sampling, identification of anomalous mineralization at surface. As you can see there in some of the photographs, we've got at the top photograph is outcropping spodumene-rich pegmatites. On the bottom left, you've got outcropping copper mineralization in fresh rock. And on the right-hand side, you've got nickel and copper and cobalt gossan there, which is sitting over the top of one of our ore bodies. So we actually have at surface multiple examples of outcropping mineralization, and that just makes the exploration so much easier. So we're going to talk a bit briefly about the lithium story at the moment. There's a aerial photograph of the tenement package. There's 3 exploration licenses totaling 108 square kilometres. The yellow stars are some of the nickel prospects that we've identified, but the red shapes that you can see on there, they are the visually confirmed outcropping pegmatites that we've identified and mapped on surface. So that pegmatite swarm is from east to west, is about 9 kilometres long. At its widest point on the eastern side of the tenement area, it's 4 kilometres wide. We've identified over 700 individual outcropping pegmatite bodies within that swarm, and they vary in size up to over 1 kilometre long and plus 100 metres wide at surface. So the potential is there for some significant volume of pegmatites. And within that, those outcrops, we're identifying the lithium-rich mineral spodumene, which is the preferred lithium mineral, on a lot of those outcrops. And the majority of those pegmatites seem to be quite shallow dipping, either flat lying or 10 to 20 degrees towards the north. And this is what some of the outcrops will be looking like that we've sampled. So on the left-hand side, the photograph there is that particular outcrop is, majority of it is spodumene. The assays we got back from this rock and similar ones in the area are all in between the 4 and 5% lithium grade, which is incredibly high grade for rock chip samples. On the right-hand side, you have a more bladed style of spodumene, and those samples in that area came back in the 3% range. And we have some examples of this at our booth outside, so you're very welcome to come along and pick them up and have a closer look at the spodumene. Zooming in on one of the areas where we did a lot of work, there's a number of prospects there. We took an initial just over 100 samples, with which we could visually, in some of them, visually, we could see a lot of spodumene. Some of them it was quite fine-grained. And within those samples, 109 samples, now over 73 samples returned over 2% lithium. So incredibly high grade and really continuous across that zone. And then you can see on there, there are multiple high-grade samples that are on these mapped occurrences of the outcropping pegmatites. And then late last year, as Chrissy said earlier, we were drilling a nickel target, and it's hole 199 up here. And we're just testing a geophysical target. We didn't hit much nickel in it, but we actually went through a very high-grade lithium-rich pegmatite there that returned over 7 metres at 1.5% lithium. So very, very encouraging there. And we weren't even really targeting that particular pegmatite. We drilled it, we recognised it, sampled it, and got a great result. And this is a photograph of a piece of the drill core there. The overall intercept just over 7 metres at 1.5%. This particular sample that the geologist is holding, just once again 1.5% lithium oxide. And you can see in there that the white shapes, they are the long blades of spodumene that you see in the core, that you see in the outcrop as well. And they're all in a ground mass or a host of grey quartz. So it's really in this rock, you've got quartz and you've got spodumene. Work program going forward for the lithium in this year is drill, drill, drill. So we've got diamond drilling starting within the next week or so, and that will be continuing for as far as I can see. And RC drilling probably getting underway in March, and potentially 40,000 metres. If we are successful with the hitting lithium, then that 40,000 metres will be over by mid-year. And then we'll just rinse and repeat and go out and do a lot more, because this is looking incredibly promising. On the nickel, copper and cobalt side, we've got 2 deposits, as I mentioned, the Andover deposit and the Ridgeline deposit, both located in the lower left-hand corner, in the southwest corner of the tenement area. and really good, consistent mineralisation. The potential we see is for multiple deposits in the Andover area, and potentially, if it develops in that direction, we have multiple mines feeding a centrally located processing facility. Two deposits are located very close to each other. There's only 200 metres between Ridgeline and Andover deposits. So that presents a co-development underground mining scenario there that we're currently investigating with the scoping study that's underway. Certainly the metallurgy of both deposits is excellent. We get really high recoveries of nickel, copper and cobalt into two separate concentrates, a copper concentrate and a nickel cobalt concentrate. Very good grades in those, 25% copper in the copper con and 13% nickel in the nickel con, and very low levels of deleterious elements as well. So this actually produces two really high-grade clean concentrates, which would be very highly desirable in the marketplace. Quick snapshot of the long section of the Andover deposit there. So we're looking towards the north. Over 70% of this deposit is in the indicated category, and which makes it a very robust deposit in its own right. But what's really nice about it is that part that's in red there, the indicated, the consistency of mineralisation, both in terms of the width of the mineralisation, the grade of the mineralisation, and just the continuity of it from top to bottom is excellent. We're talking up to 25 metres in true width there, which would make it a very convenient underground mining scenario. And on Ridgeline, we've got on the left as a plan view, on the right-hand side, a long section there. Once again, very good continuity. This was a blind deposit. It doesn't come to closer than 200 metres to surface. So we didn't discover it from surface exploration. We discovered it by drilling next door at the Andover deposit and then seeing the geophysical signature of this deposit of Ridgeline through one of the westernmost holes on Andover. So that indicates that there is potentially a lot more of these deposits that are not yet recognised below surface, and just further exploration is needed to identify and drill those out as well. And both with the Andover deposit and this Ridgeline deposit, mineralisation is continuous and is open at depth. So further drilling at depth is likely to significantly increase the size of the resources. So where to from here for the Andover project? Well, on the nickel side of things, we've completed the two MREs, and we've got a lot of other really high priority targets, which we are going to be continuing as well. And so that nickel exploration is ongoing. But in parallel with that, we have a second stream, a second pathway, and that is the lithium exploration. So we have two teams on site, a nickel focused team and an exploration team focused on the lithium. The drilling will be underway very shortly on the lithium. That's going to be ongoing throughout this year, I would expect. So there's a lot of activity on the ground from an exploration perspective. And then on the development side of things, we've completed, we are nearing completion of the scoping study for a development strategy on the Andover nickel deposit. And those components are that you can see on the right-hand side. And if we are successful, then that work will just be ongoing as well. ESG is obviously very important. The community relationship side of things is incredibly important for us up there, as is the environmental side as well. So we spend a lot of time and effort working very hard to make sure that we abide by the absolutely highest standards possible. So where to for the rest of the year? We're on the nickel. We have a scoping study nearing completions, come out sometime in the next 2 or 3 months. If that gives us a positive outcome, and you just don't know until you get the final results, then I would expect that we would launch straight into doing a PFS and then into a DFS, into a development option for the nickel side of things, and obviously continuing to drill additional resources. The lithium, drill. That's what we want to be doing, a lot of drilling. And once we get samples coming in, we'll be doing the metallurgical studies plus all the other various hydrological and environmental studies that need to be done on those areas as well. And potentially, maybe, a maiden MRE by the end of this year. So that's the Azure Minerals story and the Andover Battery Metals project. And I thank you very much for your attention.
Thank you very much, Tony. When I was looking up the Azure story, there was a little side article on the website that caught my eye. You might have seen it. they were talking about Amazon's self-driving car Zoox. Have you heard about the self-driving taxi in Zoox? They're apparently doing tests with it in California at the moment, using their staff as their test dummies, their passengers, and they're expecting it to be close to launching that service to the public. Have a little look at that one for some light reading and add a bit of fun. All right, Andrew Peckham, you're not here for fun, are you? No, look at him, even though you're smiling. He's the Managing Director, the CEO of Ardea Resources, which is based in my hometown. He's a geo, he's also a resources sector executive, and he's got over 28 years of experience in the resources industry. And he's here today to provide an update on Ardea. It is Ardea, isn't it? Excuse me, Ardea's globally significant Kalgoorlie nickel project. Will you please make him very welcome?
Thanks for the introduction, Chrissy, and welcome to everyone today, and thanks very much for making the time. So I'll be providing an update on our Kalgoorlie nickel project and the feasibility study work that's underway, but also the high impact exploration that's continuing on our strategic KNP tenure. Standard disclaimer, you're welcome to look at that in your own time. It's in the presentation on our website and on the ASX platform. So I'll just set the scene with the lithium-ion battery sector. We've got the Chinese have been planning strategically for decades. They dominate every aspect of the lithium-ion battery sector. But like everyone else, they still have to source their raw materials. We're seeing supply chain security concerns escalate in and around the COVID impacts. And we're seeing the Inflation Reduction Act in the United States. We're seeing Europe looking to implement a similar strategy, looking at ensuring supply chains and their battery and critical minerals sectors in March. So it's all about ethical and sustainable battery mineral supply. So at the top of that list, we've got Australia. We've got Western Australia is consistently recognised as the best operating resources jurisdiction in the world. And then you've got Ardea with our globally significant Kalgoorlie nickel project, which is the largest nickel cobalt resource in Australia. So this country risk map says everything you need to know. Only 16% of the world is in the low risk category. And again, at the top of that list is Australia, and similarly with Ardea's KNP in Western Australia, we've got that location benefit. So just a quick snapshot on the KNP. We've touched upon the premium location, but also you take into account over 130 years of continuous mining in the eastern goldfields of Western Australia. So mining's well recognised and supported by the local community. Ardea retains 100% of its projects, and most importantly, 100% of the offtake. So that gives all of our stakeholders exposure to that maximum upside. Once you give away the offtake, you can't bring it back. So it's so important that we retain that for as long as possible and continue to advance and add value to the KNP. We're looking at developing a globally significant nickel cobalt operation using proven technology successfully utilised at existing operations. We've been awarded major project status by the federal government of Australia in March last year, and we're continuing stakeholder engagement with every level of state and federal government. Just a little bit now about the nickel market. So the figure on the right highlights that global stockpiles are at record low levels. And then if we add on top of that, the rapid growth in the lithium-ion battery sector driven by the electric vehicle revolution. So I was reading some stats last night. So in 2022, we saw a 55% increase in sales of plug-in electric vehicles. So that was over 10.5 million vehicles. That exponential growth is set to continue. But again, I'll come back to the first slide and where are companies going to source their battery and critical minerals from. So every nickel resource is going to need to be developed to ensure sufficient supply. Our location, all of our tenements are highlighted here in red. They total over 4,000 square kilometres. We've got infrastructure either passing through our leases or in close proximity and direct road and rail links to the Port of Esperance and Perth. We've also got a local office and a local team and prioritised stakeholder engagement. This is an example of the infrastructure passing through our granted mining leases at Goongarrie. And I'd also like to highlight the Greater Western Woodland. That's one of the greatest assets of our projects. We know from the history of mining in the Eastern Goldfields that this area rehabilitates very well. We have none of the challenges that tropical laterite nickel producers experience in the tropics. We don't have to deal with high rainfall, the potential for seismic activities. We don't have tailings disposal challenges. We don't have rainforest habitat destruction. We have extremely strong stakeholder support, and we've got a flow sheet that's built around minimising CO2 emissions. You'll see our Goongarrie hub, the focus of current feasibility study work. I look forward to being able to report an updated ore reserve and the financial metrics for the project in the June quarter. Goongarrie is only 70 kilometres northwest of the city of Kalgoorlie-Boulder, so we get to leverage off that mining skill set and the experienced workforce. So what makes Goongarrie so unique? You see on the plan on the left, we've got over 25 kilometres of strike and there's 4 deposits. We've had preferential weathering over some 2.7 billion years, and we used to have Lake Goongarrie several million years ago, partially overlying Goongarrie South, Big Four and Scotia Dams. So we've had preferential weathering and multiple movements in the water table, and it's leached out all the silicate minerals. So we're left with this beautiful iron-rich goethite shown in the bottom right, and that is the premium ore feed for laterites because it's got very low acid consumption and rapid leach kinetics. And most laterites tend to be 20 to 40 metres thick. At places in Goongarrie, at Goongarrie South in particular, it's over 120 metres wide, grading over 1% nickel, and that perfect geometry for conventional open pit mining. And really looking forward to reporting the updated ore reserve with the PFS. So we talk about the project scale, 3.5 million tonnes per annum, 2 1.5 million tonne per annum autoclaves and a 500,000 tonne per annum atmospheric leach circuit. We've learned from existing operations such as Sumitomo Metal Mining's Coral Bay operation in the Philippines. We've seen 2 recent HPAL projects in Indonesia ramp up to nameplate capacity within 3 months. The flow sheet shown in detail here. Anyone who'd like to delve into more detail, please come and see the Ardea team at booth 44. But I just want to highlight the premium goethite, all free dig shown in the bowl on the left. Perfect for open pit mining. And then with our flow sheet, all aimed at maximising recoveries using existing technology. And the inclusion of the atmospheric leach circuit helps us control the acid consumption. We'll have an on-site acid plant, which will also act as our power plant. So all of our power is generated off-grid with 0 fossil fuels involved. Late last year, we had a research and development breakthrough with mineralised neutraliser. So the photo on the right highlights the orange-brown goethite material, then the blocks of white are the saprock or the magnesite neutraliser. So we can screen that. The fines go into the autoclave as high grade, and then the coarse white fraction is used as neutraliser. So that saves significantly on consumable costs, having to import as much limestone to site, and similarly it saves on the CO2 emissions with transporting that material to site. We've got a patent pending on that R&D breakthrough. This figure just highlights our industry-leading low CO2 emissions. We're less than a quarter of your typical nickel produced from a laterite operation in Indonesia, and in progress feasibility study work streams are driving those emissions even lower. It's a closed cycle with our project development, so we will progressively rehabilitate, so we will backfill the open pits. with the neutralised tailings that will dry out, and then it will be progressively backfilled with stockpiled topsoil and revegetated. So I have this continuous loop, best practice in the industry to return the area to the state in which we found it. The PFS is in progress, being managed by a quality team. Once we're in production and developing this project, we're going to be a significant local employer and contributor to the local and national economies. Just touch upon now on some parallel explorations. So Ardea have over 4,000 square kilometres of tenure in the Eastern Goldfields. It's prospective for a range of battery and critical minerals. So we can do both the feasibility work streams and advance the exploration and demonstrate that blue sky upside as well. So we've had some recent nickel sulfide exploration success at Kalpini, 70 kilometres northeast of Kalgoorlie. Results such as about 3 metres at 5.4% nickel. The exploration team's currently consolidating all of the drilling data and the historic legacy data and planning next steps on this significantly underexplored project. We control 20 kilometres of strike, and we've demonstrated that at least 3 different komatiite flows are all prospective for hosting magmatic sulfides. So now we've confirmed the geological model. You can see some of the high-grade material there. We've got a sample at our booth grading 8% nickel, and we're awaiting some air core results from a 24-hole program undertaken in the December quarter of last year. So there'll be continual news follow as we continue to unlock what we feel is an emerging nickel sulfide province. We announced the discovery of an ionic absorption clay rare earth discovery on the 30th of January this year. So this drilling was completed 1 kilometre to the west of our laterite resource definition drilling. It's a completely new discovery. We've got 3 holes on 1 kilometre spacing. The mineralisation's open in every direction. We've selected samples for preliminary metallurgical test work, and based on those results, we'll be doing additional work. This could be another standalone project all on its own. And as this image indicates, it's very much clay hosted, and clearly the clay rare earth element deposits tend to have much lower mining costs, operating costs, and favourable metallurgy, and we'll provide updates as work's completed. On the lithium potential, because of our large Eastern Goldfields tenure position, we're undertaking opportunistic evaluation. Desktop studies have revealed exposed pegmatites at Ghost Rocks and Perringvale. We've undertaken initial reconnaissance work, and we're waiting for sample results to come back. So we look forward to reporting those results and continue to unlock the battery mineral potential of our tenure. ESG is a serious and major consideration for the company, so we partnered with Digby ESG to have an independent annual audit, and our first audit in September last year returned outstanding results, and we'll continue to build upon those. So just in closing, we've got a globally significant nickel cobalt resource. We've got the rapidly growing demand for battery minerals behind the billions of dollars being invested in building gigafactories around the world. We've got a local team with a track record of success, great stakeholder relationships. Our projects are located in the best operating jurisdiction in the world. We're using proven technology to unlock the Goongarrie deposit, but we're also looking at continue exploring and value add from the other critical mineral opportunities. And we continue to keep the company online and look forward to providing updates to the market. And thanks very much for your time, and enjoy the rest of the event.
Thank you very much, Andrew. Now, back on the 8th of January, after 1,016 days, China called time on the world's toughest COVID restrictions. The borders reopened. There were predictions made about what the great reconnecting of China with the outside world would mean to global economies, to inflation. It's been just over a month since the reopening. Did it cause a splash? Did it cause a ripple? What's up next? Is it a bonus or a challenge for markets amid low inventories and all of those supply constraints? This fella here is Daniel Hynes, the wise one. It's his turn to answer these questions. He actually heads up ANZ's commodity research offering, and he brings over 25 years of experience to address this question. And ANZ uses your expertise to help the bank and the clients navigate global commodity markets as the world accelerates its transition to renewable energy. So you are the fellow to help us out this morning and round out this first session. Would you please make him very welcome, everyone?
Thanks, Chrissy. Yeah, it's been quite a eventful few years. In fact, this is my first return here to the conference in 3 years after a long history, attending and support that ANZ has provided. So it's really exciting to finally be back, attending these conferences live. On that note, actually, I have a couple of colleagues in the crowd at the moment, Tim Robertson and Bindu John, who cover ANZ's relationship with the mineral explorers. So if you see them around, make sure you have a chat and see what we have to offer. It has been obviously quite an eventful few years, and I think only 3 months ago, we were looking at a pretty dire 2023. We had high inflation. We had central banks tightening monetary policy, so raising interest rates, and we had China, who looked at the time to be headstrong on maintaining their zero COVID strategy. But all things changed quite dramatically in late November. You would have seen, obviously, a little bit of social unrest, which is relatively unrare in China, regarding the heavy restrictions, and China suddenly reopened quite dramatically in December, and it's been once again a roller coaster ride then. So I'm going to walk you through, I suppose, some of the issues we see coming after that reopening, and it's not going to be a one-way street for commodity. There's certainly be some issues in the shorter term, but we think broadly it's going to be obviously a very positive event for commodity markets. You can see here on this chart, I suppose, just highlights how the global economy was performing last year. This is our global leading indicator. So it's a bit like an estimate, a real-time estimate of GDP or economic growth. And you can see through 2022 in particular, that dark blue line there, China, just showing how much it was contributing to the weakness in the global economy. But increasingly now, as you can see with the lighter brown bars there, Europe and the US have been really contributing to that weakness. We do think, obviously, with China now reopening, that it will start to, I suppose, mitigate some of that weakness, particularly in the shorter term. But clearly, there's a lot of water to go under the bridge. But here you can see, I suppose, the dichotomy now between some of those major economies. After some pretty strong growth rates through 2021, as the advanced economy in the Western world sort of rebounded from those COVID restrictions, we've seen growth fall off quite sharply. Now, we're facing 2023, a situation where we see US growth quite slow, as you can see there. We think the Fed is going to continue to raise rates, at least in the first half of this year, which is eventually going to weigh on economic growth. Europe is still emerging, I suppose, from the energy crisis there, which I'll talk on shortly. China now stands out once again as a centre of global growth. We think it'll rebound to about nearly 5.5% in 2023. You can see, certainly for commodities, the manufacturing sector is always an important one for demand. And in fact, when you look across, I suppose, the broader sort of global economy, you can actually see, some of that weakness in manufacturing starting to bottom out. And in fact, we've seen a couple of countries move back into that expansionary territory, which is that 50 line there on the index. In particular, China in January just popped its head above that level, which is quite promising considering, the surge in new COVID cases during the month, and certainly leading up to the Chinese New Year. So there was certainly a lot of hope within that market that that manufacturing side of things would start to rebound again. But as I sort of alluded to at the start, it's not all going to be roses. Certainly, there are still fundamental issues with the Chinese economy that won't be rectified, by, I suppose, some of the policy measures that officials are bringing in. In particular, it's the property sector. The heavily indebted sort of nature of the developers there in China is going to continue to restrict activity, in particular, new housing starts and new construction. Now, you can see there, it does look like it's sort of bottomed out and maybe showing signs of improving, but we think, the ability of that to really grow strongly is severely constrained despite some of these new policies they've brought in, such as allowing developers to carry more debt, restrictions on consumers as well. Purchasing in terms of down payments and the like have also been lifted as well. But certainly, it's going to be a difficult year, I think, for property sector. And you can see here, I suppose, this just highlights the difference that we're seeing in some of those sectors. Now, the credit impulse is basically a measure of credit in the system at the moment, and tends to fairly accurately show how some of the key commodity sectors perform. Now, at the moment, we're seeing a relatively strong pickup in retail sales, in vehicle sales, but you can see there in that light blue line, the housing sector continuing to show weakness. And I think for the first time, we'll see some of those measures just start to move away from that general trend that we see as credit is improved in that economy. But what they are pretty keen on is securing supply. And you might have heard it briefly in some of the presentations this morning, but security of supply is a major issue for some of the major consumers, particularly in some of the new sectors we see emerging. And so China is particularly keen to build up its import growth as a result of that. You can see already we've seen some key commodities record some relatively strong growth rates in imports after a pretty weak 2022. We certainly think that's something that's going to continue in 2023. Certainly for the reopening itself, the energy sector is going to receive the greatest boost. And you can see here, a relationship between traffic or road transportation against oil demand. Natural to expect, after months or years of heavy restrictions that as they reopen, we see a pretty sudden explosion in transport and movement and mobility across the country. Now, China had obviously the Chinese Lunar New Year in late January. We saw traffic actually climb quite strongly as a result of that. But more interestingly, the development or the sales of auto vehicles and the like has actually been really strong. Registrations for new vehicles actually in the week just prior to this were up about 200% year on year. So, clearly, after being restricted and really scared to travel across the country, consumers there are quite active. And that's going to have obviously a really big impact on demand for oil. You can see there through 2022, we had that apparent oil demand fall below 14 million barrels a day. In January alone, we saw that jump basically 1 million barrels a day in that month. We think that type of growth is what we're expecting over the course of 2023, which is going to have a big part to play within the global oil market. You can see here that growth this year essentially being driven by China, well over a third of all growth coming from that one country, and then less developed economies providing about 40%. You can see there actually the US and Europe, that weak economic backdrop there really constraining growth in oil demand as well. LNG, though, is one area where we probably don't expect to see a huge pickup in inventories. They've already had a relatively healthy sort of level prior to that, and imports are probably going to suffer just as a consequence in the shorter term. But it is a really important sector for China over the longer term. You can see here the amount of regasification capacity that the country is building over the next few years. This is only going to get greater as it tries to transition to lower carbon sort of fuels and ultimately renewable energies. LNG, we think in particular, is going to be a significant part of that energy transition, particularly in China, where it's still heavily reliant on coal-fired power. But it's coming into a market which is particularly competitive. You're obviously quite aware of the issues in Europe, and they have essentially moved away from piped gas from Russia, but obviously now relying significantly more on the LNG market. So their re-inventories of all the storage build-up that they're expecting to do through 2023 is going to become increasingly complicated with China really active in that market. On the metal side, we're seeing some really positive signs already. Our China copper indicator here shows that we've already seen a pickup, and I suspect that's only going to get greater as we see those real drivers of copper demand kick in. One of them being the investment in the power grid. You would have been aware the issues globally around energy shortages, and China hasn't been immune to that. Even last year, we saw shortages, even with that lower economic growth, and the ability of them to transfer power around the country had been inhibited by lack of inter-provincial sort of connectivity. So they're putting significant more amount of investment into the grid infrastructure, which will really drive copper demand. Renewable energy itself is, as you see, fairly heavily reliant on copper, as a lot of other metals. There are significant build-up of capacity in that country as well. You've heard a lot about EVs. We're seeing a pretty strong growth rate in China, which is now the world's largest market. We did see a fall off in January, but that was more related to some subsidies which came off at the end of last year. But foot traffic through some of those showrooms at the moment show that that's going to continue for the foreseeable future. But even if we do have some weakness, we're expecting to see export-driven demand really pick up. Certainly demand for EVs in Europe and the US are growing quite strongly. And I think China is really earmarking itself to fill the gap in there. Build out of storage capacity as well, really going to, I suppose, the vanadium story just heard before, but also lithium is accelerating quite sharply over the next few years. But this also comes against a relatively low buffer. So inventories are pretty low, as you can see here, certainly on a days of supply consumption. Copper inventories have certainly picked up just recently, but more based on sort of restocking efforts as consumers start to rebuild and certainly manufacturing activity picks up. Even on the oil side, inventories are pretty low, despite, I suppose, the collapse in oil that we saw over the past few years. Even strategic reserves, such as the one in the US, has fallen quite sharply. And I suppose the imposition of additional supply into this will be a key contributor to demand. But within all this, we have relatively low levels of growth in supply, which is going to exacerbate the situation. So you can see there the growth in the major commodities have all fallen away. And that's been mirrored by CapEx intentions, at least in the shorter term, still relatively low. As you can see there as well for some of the other critical minerals. So how do we see the commodity markets? It does feel like we're setting ourselves up for another commodity rally. Strong demand coming from China initially, then the advanced economies against a backdrop of low inventories and relatively low growth in supply. So we think that commodity rally is really setting the scene for further gains over the near term. Thank you very much.
You were worried I was going to grab my cattle prod out then, weren't you? Go forth, people. Free. That was a fantastic lineup. You did very well. 2 hours. We've got an hour and a half session for the next session before lunch, which should be at 1. I'll ring the bell at about 11:10.
Hi, my name is Brad Gurry and I'm the CEO of Social Suite. The Social Suite's an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference. And I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Gallon Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, 1, to attract capital from investors that value ESG disclosures, 2, creating revenue through responding to supply chain requests and the negotiation of offtake agreements, 3, mitigating organisational risks while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your